the next is now it's the liability side. So in this case, the insurance, let's say this is 1st of January.
Yep.
Let's say it's just the beginning of the year where you do it.
Yep.
And let's say it's a car insurance. Because the insurance is true for every day of the year, isn't it?
Yep.
And basically you get, let's say it was $365 to make it easy.
Yeah,
So
dollar a day.
basically you pay $1 a day. You know, you have this kind of cash because you can't pay every day $1. You could also then go to hourly, to minutes, to seconds, you know, continuous payment is not possible. So that's why you have annual payment and things like that. But the meaning is really to cover the whole period. And basically, let's say, and this is then 31st, 12th here. And if you do now again the same equations as I did before, so you still can do value follow beta is equal nominal value t, of course, plus PD beta.
Okay,
Now
just describe, just while you're saying this, describe for the viewers what PD nominal NV is nominal value, PD is
yeah,
some discount,
exactly.
right?
Exactly. A nominal
Premium
value
discount.
is the future cash flow. If you go to the book and look at all the equations, so nominal value is always the future cash flow.
Yep.
Since there is no future cash flow anymore after payment, this becomes zero.
Yep. So this is
So
real.
the only
This is
thing
real
you have,
finance stuff. Yep.
yeah. So the only thing you really have is now PD. And the PD beta says which rule it follows. You have to define. In our case, say let's equal linear. And 1 year, there goes 1 year with it. When it says linear, it asks up to what point. We say it's this point, as you're used as an accountant. That's all you have to say. Now, at any point in time, I can come and say, how much is the PD now? It will give you this answer.
Yep. And then
If you come here, it
you
gives you.
can use that to derive your profit and loss
And
and your
that's the
balance sheet.
delta P, and this is the delta PD, nothing else.
Yep.
And this is equal P and L. You see, it's beautiful,
Yeah.
and you have delta PDs in your bonds, in your stocks, in your options, and it all flows naturally together.
Yep.
Huh?
Yep.
And then of course next to that, the insurance has then yet the real accidents. They come in as more the operation. Let's go. Maybe I come back to that one after here. But I think that explains it well, isn't it?
Yep.
The second, the next. The next thing we have is what I would call reserve. In our case, we have a contract called RS. Again, it's not an actors contract, but one defined by us. And the reserve contract is you do something at this point, and you know you expect the payment here.
Yep.
Or you expect the series. Let's
Yeah,
keep
that's
for
like,
a
for
single
instance,
payment.
debtors or creditors, right? So it's just
Yeah,
30
exactly.
days.
But like it's same thing like receivable and payable. So it goes in the same way, receivable, payable. So you have that, and you now can here. So what it happens to the contract here is that here it creates PD. Again, the same concept. PD, they stay abstract.
Yep.
Not just call it PD. It comes from perimeter scan. But basically, so what it does here, and of course the system knows the contract. Here, the PD is 0. At here, the PD is 0. Here, it jumps to this level. And what does it do if you have PD from here to here, the delta PD? That goes to P&L again.
Yep.
So you have a P&L booking, and then what happens here? Here you have a pure cash flow booking,
Yep.
and the system knows all.
Mm. Okay. Yeah. I've sort of got the point now, Willie. So really, your system can consume these contracts and generate the reports, right?
Yes, and not only that, we can if I'm interested in the fair value here, what do I
Mm.
do? I take sorry, maybe let's take red. I take the yield curve here.
Yep.
From there, I derive the point. I discount it here and say this is the value
Yeah. So
here.
you're always using discounts and uh, discount rates to derive fair value.
Yes, yes,
And obviously for trade contracts, it's not possible like a financial contract to
exactly. For
have
normal trade
it's.
contract is, and that's why we need it now. We said rule number one.
Mhm.
Everything on the on the balance sheet can be represented by contract. So if I add these two contracts to the actors contract, there's nothing I can't cover.
Yep.
Nothing I've seen. Let's say there would be one, we would add one.
Yeah, yeah,
Huh?
yeah. Okay,
If the
so in terms of an input for your engine that runs these contracts to derive the reports, I think I saw that you've got some XML examples, right? JSON examples. So
Jason
so
example, yeah.
everything's there and available as a JSON. Have you got trade? Have you got examples for trade contracts?
No, because these are not actors contracts. Huh? So
Oh
I
yeah, okay. But you
these
said
are
that your
our
system can handle trade contracts.
exactly our system handles all that and all the logic.
Yeah, yeah,
I
yeah.
can and
So why
maybe
can't
at
you provide
yeah.
some examples? Why can't you provide some JSON examples and then?
Uh, uh, Yeah, we could, but at the moment, we have so much to do,
Oh,
and I think it would be very good that if we would come into a serious discussion, then maybe with audit chain, because here we are really offering more, as you can see.
mm,
Um, and I think then in order to progress, we really should think about doing business together.
yeah, of course. I
And
mean,
I
look,
think
I
so.
mean,
Here we should talk then with Jason, maybe, or I don't know how that is. That's what actually Charlie says. Mhm.
yeah, 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 yeah. Well, look, I mean, you know, I reckon you. So, what's your plan from a business standpoint? Make this as a generalized service.
Yeah, something. I mean, we would have to discuss,
Oh, right.
But maybe let me add yet one more
Mm-hmm.
thing. So because now we have said we have found the two additional contract types we need to
Mm-hmm.
represent the full business, not only of a bank and of an insurance,
Mm-hmm.
but also of
Any
anything,
business,
huh?
any business. Yeah.
Any business. And of course, let's say if you have a bank, you have a
Mm-hmm.
lot of financial contracts,
Yeah,
a
look,
few
the
of them.
financial, the complexity of those financial contracts for banks is quite different to the trade con. You say that the world of trade is messy, and it might be, but I don't think, the way that you look at the contract is probably more simple, right?
Yeah, that is much simpler.
Like a debtor and
Yes, yeah,
creditor,
exactly.
debtor creditor trade contract that runs for 30 days with very few
Yeah,
terms is very
very,
different to
very
some
simple.
complex,
Yeah,
complex
yeah.
financial derivative.
Like an option or something
Yeah,
like that, huh?
exactly.
So it's this is a classical trade
Yeah, yeah,
contract,
yeah,
huh?
yeah,
But
yeah.
for one it's payable, for the other one is receivable. By the way, that's also very beautiful. In a system like this, you would register that contract once, especially together with a blockchain, and you would do two tokens. Token one is the asset side, say, so for them it would be a receivable,
Hmm.
and token two is the liability side, it's a payable. Huh? But the contract is really one because it's a single agreement between
Yep,
you and me.
yep.
It's just you look from the different
It's
side.
two
That's all.
perspectives.
Huh?
Yeah, exactly. I
And
agree.
that
Yeah,
is plus, and this is
yeah,
minus.
minus.
That's
Yeah,
all.
yeah. No,
So
definitely. Yeah.
it's
Yeah, I
the
mean,
whole
but and this
lot.
is the beautiful thing with triple entry or blockchain based or any even something like Baseline, which is
Hmm.
super cost effective. You're carrying out one action, but
Hmm.
both parties can use the underlying
Exactly.
components in their
Huh?
respective engines.
Exactly. That's
It's
also a
amazing. Yeah,
huge
it's
value of
amazing. It's
actors,
huge.
you know.
Yeah, it's a huge
Yeah.
value for you guys because this is what I've been imagining for a long time, Willie, is an opportunity to have an engine. I just point all my contracts at the engine and it just gives me a
Yeah.
result. And I
Exactly.
tell I
And
tell the engine, I give it the bookkeeping rules, throw the contracts there, get my and derive my result.
exactly.
Yeah.
And basically, this token says who you are or who the other guys are. And you always know how you have to look at the contract. And then this gives you the cash flow. And then you add the accounting rule, the bookkeeping rule.
Yep.
And then you get your value. This guy might look from a fair value perspective. This guy gets this. This guy looks from a normal value perspective. He
Yeah,
gets
yeah.
this.
And this guy wants to
And
use
vice
US GAAP. This
versa.
guy
And
wants to use
yeah,
IFRS,
yeah,
whatever.
yeah, yeah. It's all that.
Wow.
Um,
Okay.
uh,
Well, look. I mean, I'm
now,
surprised.
now,
I sent an email a while back saying that hopefully Jason would cut some kind of deal, but I don't know.
so that we should then discuss. I will discuss with him.
Yeah.
Finally, so this covers the whole balance sheet. There's one thing missing now. The last, what I
Willie,
call.
I have a use case coming up for this. I have a few use cases.
Mhm.
I have a few use cases. Actually, I would show you one which was an example that I ran, which there's immediate use for some of this stuff. Um, yeah. Anyway,
Yeah.
did you want to
So
keep going?
so yeah, just to finalize this one, and I come back to the use cases. Fine.
Yep.
Okay. So there's one thing, now we have all cash flows which travel via the balance sheet.
Yep.
And all the P&L, the correlated P&L, everything is covered, 100%. Now there's one final thing. These are those cash flows which hit directly only the P&L and only reflecting cash. Like, the small stuff, the
Yeah, yeah.
things which you don't activate.
Just buying, your cup of coffee, the staff
Or
amenities.
couple, or even salaries.
Yeah, yeah.
Normally you
Yep.
don't activate, except if you, for example, have, let's say you have a Christmas payment that you could build up. That would be a series of reserves
Yeah,
over
yeah,
time,
yep.
and at Christmas the whole cash flow comes. So, but otherwise you pay every month. You say this is salary against cash. And you deal it every month. So this now, of course, you could even activate that. Theoretically, you could say if I do an intra-month balance sheet, then, the guy has worked already for 10 days, so it's accrued 10 days of work. So let's put that into the balance sheet. Theoretically possible. Then we are then we treat it as a investment.
Yeah, yeah. This is actually
So you
this is a
accrue.
far more precise methodology for doing accounting than most accountants have ever been used to.
Yeah, exactly. And if you don't do that, then you have to use what I would call the P&L cash flows. I don't know how to call that. Are those which just you would also tag them separately. You say, look, these are cash flows which hit the P&L directly, and they just have a consequence on the cash balance. That's
Yep.
it. So now you can derive everything.
Yep.
This system is complete.
Yeah, nice. Yeah,
It's
perfect.
it's complete,
Yep.
and you could derive your accountings, your anything you want to do.
Yeah, now look, I mean, I don't know why you haven't got a generalized API and a set of instructions for how people call it with the contracts, trade and financial
Uh,
contracts.
we for the contracts we do have for the financial contracts
Right.
for this we don't have yet.
Yeah.
And
But how far off are you
yeah,
with
we
that?
could do that. We could do that.